This is your host, Stephen Sargeant, the Around the Coin podcast. What an amazing episode we have for you with Zaid Rahman. He's the CEO and founder of Flex. This is basically an end-to-end finance platform for small businesses. Realistically, they do everything, whether it's credit worthiness, expense management, payments, account, like they have everything in one platform. All the things as an entrepreneur, to be quite honest, that is holding you back from reaching the full potential. I'm not even trying to sell this company. I was a fan, and it's Flex, www.flex.one. Just an amazing thing for you to check out if you're an entrepreneur or a startup. He's also a Thiel Fellow and is a founding and managing director of 305 Ventures, which is basically founders investing in other founders. We even talked to him about his first company, Volley, which was basically trying to teach computers how to understand knowledge with AI, kind of like ChatGPT. It's fun to talk to him about his early exposure and maybe being a little early in the AI game. This is a fun episode, must listen. Check it out and let me know what you think in the comments, rate, review, and definitely subscribe to this podcast. And check out Zaid on all his platforms. Just an amazing entrepreneur. And he drops so many gems for founders, startup entrepreneurs, drops so many gems about the game and how to get investment, especially in these tough times of VC funding. Talk soon. Welcome to another episode of the Around the Coin podcast. Your host, Stephen Sargeant, here with Zaid Rahman, founder and CEO of Flex, which is an end-to-end finance platform for small and medium-sized businesses. But you're also an angel investor. You were part of the fellowship for the Thiel Foundation. We're going to get into all that. But you also started, what I want to start is Volley. Tell me a little bit about Volley, because, in your LinkedIn description, you mentioned that it was to teach basically computers how to understand knowledge with AI, similar to ChatGPT. And that was, quite a few years ago. So maybe tell me about Volley and what you think about ChatGPT now. Were you on the right track? Could you ever have done maybe what OpenAI has been able to do?
Yeah, it's hilarious that you asked that. And thank you again for having me on the pod. What's funny is that in some ways we started working on large language models before that was even a phrase. And so that company was in 2015. So easily like almost a decade ahead of its time. And ultimately that company wasn't a huge slam dunk success story because it was, the timing was a little bit off. But really what we were trying to build was a tool to sort of teach computers how to understand knowledge in a way that then it could spit out new types of personalized learning materials. So for example, I'm a student of biology. I want to learn about photosynthesis. It would ask you a few questions and based on that kind of create personalized resources from across the web and sort of provide you video content and kind of text content. And fundamentally, the thing you need to do in order to do that is actually, do something called ontology learning, right? And so we were literally basically like doing what OpenAI did with, GPT-3 and 3.5, where we were effectively trying to infer natural language text and create these models that could then spit out new types of generative textual content. And then ultimately, we figured that the technology was just not good enough to do mass market content. And so we started focusing on very specialized areas. And one specialized area that we had a lot of success in and started generating some revenue for us was actually cyber education. And so we started working with a lot of big Fortune 500s in the banking space, especially, JP Morgan was our biggest customer and then they became our biggest investor. And they basically took over more and more of our product. And so that was sort of an interesting kind of verticalization of what you see today with the state of the art.
Is there anything that you think about when you see ChatGPT where you're like, yeah, we kind of did something like that? Or even when you're scaling it to an actual business where there's VC backing, was there ever thought like, hey, we can just use this for ourselves and just be superior, either entrepreneurs, thought leaders, we could just really just outpace everyone else in the industry because we have this technology?
Yeah, you see these movies of people like in the 1980s, like working on like the first computer, and then you see like jump cuts to a scene in like 1999 where like you have like a super sophisticated Macintosh and whatnot. So today's ChatGPT is kind of like the Macintosh, whereas we were working on like calculators, right? And so the technology was just not there. And that's from like a macro perspective, right? Like, AI had just not gotten to that point. And it's crazy. That was just only 5 to 7 years ago. And however, we thought that it was a worthy endeavor because at the time, most people in AI were working on different applications like self-driving cars and those types of things. Nobody was really focused on natural language understanding. In fact, I remember talking to a lot of our venture capitalists, and we were backed by a bunch of interesting people, but even they didn't fully internalize what we were trying to do. In hindsight, of course, when we reconnect with some of those folks, they they often comment that, oh my God, we were just so ahead of our time. But, in business, being ahead of time is not really how you win. It's, having all the pieces put together in the right exact way and delivering something that delivers true value. And, frankly, it took OpenAI maybe 10 separate innovations to sort of get to that ChatGPT experience you're used to today. We were maybe working on one or two of them. So
And they're probably doing with
incremental.
a much bigger team, a much bigger team and a
Yeah,
lot
yeah,
more
yeah.
financial backing. So,
Yeah, really the
uh,
vision was carried out by our, chief scientist slash CTO. And that team that he ran was like maybe like 15 people versus, to be fair, like OpenAI wasn't a very large company. Like they only became, 700 people in the last 12 months. Historically they were like a 80-person company. So we
very
were not
interesting.
that off. However, we frankly did not have billions of dollars in compute resources and Microsoft and all that.
Next time you got to hit up Uncle Elon and pitch him, right? You are also part of the Thiel Foundation, which is such an interesting concept. Maybe you can explain the concept better than me. I think everyone understands that basically
Yep.
Peter's giving away $200,000 to not go to school. Maybe it's as simple as that, and maybe
Yeah.
you can provide some insights on that
Yeah, no, that's
Thiel
basically it.
Fellowship.
So, Peter Thiel, mega sort of personality in the tech space, founder of PayPal, first investor in Facebook, a number of very successful kind of, companies of significant magnitude have either been started or created by him directly and or friends of his. So very significant personality in this Silicon Valley ecosystem. He runs this very contrarian program called the Thiel Fellowship, which effectively gives you a $100,000 grant with no strings attached whatsoever, with one condition: you can't go to school for 2 years. And so a lot of people drop out, from their majors to pursue projects and startups. And really the idea is that, a lot of talent is being wasted in higher education. And, perhaps you don't need higher education for reaching the heights that you can. And so was very lucky to be part of the Thiel Fellowship. It's created quite a few very successful stories, Ethereum, Figma, Loom, a ton of, really big ideas have been created from the Thiel Fellows. But, it's funny. I like to joke that I'm like the least successful amongst them. So, but it's an awesome group.
Still a great table to be at, right? To be the least successful of one of the successful tables is always great. Was there something that you heard? Maybe I don't know how if you speak directly to Peter in this kind of cohort. Is there something that stuck with you all this time as you're building out businesses, as you are now a VC, you're funding founders basically? Is there any kind of concept or key memory that you're like, oh, this is I have to kind of live by this principle or ethos as I
Yeah.
move on?
I think one fundamental kind of thing that you learn is, a lot of people think, I come across, first time founders all the time, and they're often like wondering, oh, how do you learn X, Y, and Z? The reality is that you don't really need a formal education to go attack very big ideas. In fact, if you look at some of the most successful companies out there, oftentimes you will see founders who came from outside that industry that came and actually, created something that was substantial and solved very big problems. And so the Thiel Fellowship is really that idea, but on steroids, where you have these people who literally don't have formal education going and working on very complex problems from, working on cancer research all the way to, you know, longevity and problems like self-driving cars and so on and so forth. And so really the big idea was, training yourself on how to think and how to learn pretty much anything at will.
Now, before we jump into what you're doing right now at Flex, as I mentioned before, you're also a founder and partner of a VC backed VC company, right? Like venture, and I forget the
305
name,
Ventures. Yep.
305 Ventures. And you're partnered up with some other fellows, Joey from Better. You've invested in a great range of organizations. Like, what do you see that's different maybe than when you were a first time entrepreneur till now that you're in a different seat? Give us that perspective of, how you were pitching VCs. Now that you're a VC, maybe how you would do it differently. Because we have a lot of startup audiences, a lot of entrepreneurs that listen to this podcast, especially in the tech.
Yeah, no, absolutely. One of the great things of being in this kind of tech ecosystem is that, what's funny is that you don't really see the number of people who are working on really impactful ideas is not a very large number. It's the same kind of 1,000 people that you see over and over again. When I started in tech, 10 years ago, you'd hear all these personalities. They're the same personalities still working on big ideas, right? And so over time, when you spend more and more time in the space, you ultimately realize that wouldn't it be incredible if you start investing in these incredible minds, right? And so the 305 Ventures was really this notion of investing in our kind of immediate friend group of great kind of founders who are working on really interesting ideas. And so me and Joey Levy, who runs Better, we sort of got together, and then we recruited Michael Malikian to sort of jump on board and be our kind of full-time partner. And we started writing checks, initially our own kind of, putting our own money to work. But over time, we realized that there was appetite to add some of our other friends' capital to the mix and became a small fund. And we like to call ourselves angel investors rather than full-time VCs, because ultimately we're operators investing in companies that happen to invest on the side. And frankly, at this point, founders want to work with other founders, right? And they don't want to be working with, MBA types on their cap table. Not that there's anything wrong with having an MBA, but more so that they want to work with people who have the empathy of their problems. And so we are the friendliest check that'll ever be on your cap table because we are founders ourselves.
That's awesome. One interesting thing maybe about entrepreneurs is, and what you'll see is that, they tend to want to work on a lot of different things, right? They're on path. And then all of a sudden they hear My First Million podcast or Around the Coin podcast talk about this niche, Brazilian casino opportunity. And then they're like, hey, we need to switch, some of our aim over there. Do you see a lot of that? I know Alex Hormozi has talked about this, where he says, you should really just niche down on one thing and get more reps in that one exercise versus trying to do all these different exercises at the time. What are your thoughts about that? Do you see that a lot where the focus might not be 100% there? And maybe how does that play onto the investments that you have made where you have noticed maybe the focus wasn't there and which led to maybe less than optimal results?
It's interesting. It's a fine balance of like, having focus and also having curiosity to be a generalist, right? So there are a couple of kind of quips I can make. So one is that of Charlie Munger, who recently passed away, Warren Buffett's business partner. Charlie Munger had this thing called the T-shaped mind, right? Where you should try to be very deep in one or two areas. So that's the bottom end of the T, and be very broad in a lot of different things so that you understand concepts in a lot of different subjects so that then you can be even better in that one or two kind of areas that you're really good at. And so that's sort of the principle that I've applied where, having the curiosity to be constantly learning new things, and you never know how the dots will connect, if you will, from one concept to the other. And so one other thing that Peter says a lot in his books, 0 to 1, if you read it, is this notion that, people have a strong fascination with becoming a specialist, right? I specialize in, internal medicine. It makes sense if you're in the kind of human body kind of realm, but you hear like people like have the aspiration that academia really pushes you in this direction that, hey, I'm going to be a specialist in XYZ literature, right? But what does that really mean? Like, how's that, going to be applicable in a broad sense? And so in my opinion, the world needs more generalists, and that's particularly becoming relevant in this age of AI, where AI knows everything.
Right.
So how do you compete with a being that knows everything, right? And so I think, really focusing on being a generalist and using the creative parts of your brain is going to be even more important. But at the same time, having the discipline to be focused on one or two projects that leads to results. So those are kind of not mutually exclusive that, hey, I should have kind of T-shaped brain, but also have the focus to deliver on, key sort of milestones and objectives. And so another thing that Peter talks about, well, people who work with Peter talk about is that, if Peter's your manager, he'll often say something along the lines that when you come to work, expect to be fired if you don't get that one thing done. So his whole thing is, people tend to have lots of priorities so that they kind of procrastinate on the most
And do
important
nothing.
priority and work on like the least important, like least stressful ones. And so, sometimes it's important to have like a singular thing that you're focused on in terms of priority, but that doesn't mean you switch off your curiosity about all these other things.
Have you seen a shift in society in the tech community, especially there in Silicon Valley and Florida, where, mental health is playing a lot more bigger of the picture, where it's not like, people are locking themselves in the basement for hours. Obviously, there's going to be pushes during launches or other things, but have you seen, people just get away and maybe play a little pickleball in the backyard
Right.
versus I think what seemed like 10 years ago was like you were either living and dying this or you
Yeah.
weren't going to be considered.
What's interesting is that, and a lot of people talk about this, Bezos in particular on his recent Lex Friedman podcast talked about this at length, which I think is an interesting episode for founders to listen to, is the reality is that if you really, really enjoy your work and life becomes so integrated that, there's no sort of separation. And in fact, you thrive and enjoy your life even more because of that integration. And so you'll hear, very successful, public company CEOs report that, hey, they're in London for, some very important partnership meeting. And then, post meeting they're with their, they're with their kids taking a walk in the park, right? Those are kind of examples that you really need to sort of cultivate in your life where your life and work kind of the boundaries go away and you figure out a way to be in harmony such that, each aspect is contributing to the other aspect. And so I don't really believe in work-life balance. I don't believe that, at 5 p.m. you switch off your computer and you get in your car and commute back to your home and, you switch on Netflix and have dinner. Like, I don't believe in that, right? That's a boring life, in my opinion.
That's such a great answer. And I think everyone has their own personal perception about that. Your comms and marketing team are probably like, yo, we're 17 minutes in. You haven't even mentioned Flex. They're probably like shaking their fists right now. So let's get to the magic that you're building at Flex. We talked about all your other previous ventures and your current ventures, but let's talk about Flex. Give me your,
Yeah.
2-minute pitch. If someone says, hey, what's Flex in the elevator? What would you tell them? And how did this come about? Like, I'm always
Yeah.
interested in how people come up with ideas. Usually it's
Yeah,
from
yeah,
their own
sure.
situation, right? You need to send a wire from England to Canada because you were moving, couldn't do so. And, cryptocurrency all of a sudden sounds very interesting as an aspect or solution. And that's how people get into crypto. Tell me a little bit about Flex and how you
Yeah.
entered this domain.
No, absolutely. So, even with my own kind of entrepreneurial journey, this is my third company and, I've obviously backed a bunch of companies as an investor, but I come from one of these families, these Indian families that comes from like a bunch of small businesses. So in our family, we have a construction business, we have a small logistics businesses, and these are not, super scale businesses. You have pretty small kind of your immigrant family type businesses that you can kind of imagine. And so from those kind of experiences, one common denominator I saw across the board was that finance sucks,
Yeah.
right? Like nobody really enjoys finance, right? And, there are kind of two sub problems. So one is the finance back office is actually a pretty complex being. It's not just how much money is in your bank account. It's managing banking, it's credit, it's managing payroll, benefits, insurance, taxes. It's collecting money from your customers. It's sort of chasing your vendors and so on and so forth, right? And so all of these things are time consuming. And the reality is that every single entrepreneur in the world doesn't have time, right? And, in certain cases, you may not even have the resources or the know-how to do these things, right? So when you combine these things, what ends up happening is the back office is actually the weakest link of most businesses across the world. And the second problem is working capital, right? You need money to grow your business, especially, in industries like construction and logistics and trucking and e-commerce. There are these industries where you need to spend a lot of money in order to make money. An example of this is, you have a contractor is renovating someone's kitchen, and the client will pay them in a couple months, but they need to go buy materials today so that they can collect on those funds in a couple months. Well, who's paying for that? Turns out there are not that many short-term, sort of short duration capital providers out there that are elastic and kind of grow as you grow and so on and so forth. And so we realized that if you combine these two problems of the back office and working capital, there's a very obvious opportunity to create almost like a finance super app, a finance HQ, where you bring together every single aspect of the back office in terms of financial services and financial software in one place. And so Flex, in a short period of time, has shipped a number of products. We have a credit card product. We have an expense management product where we manage the company's spend. We have a banking product where we give checking accounts to businesses with yield. We have payments products where you can manage invoicing and bill pay. And we have the ability to finance some of these things as well. And we're working on a number of solutions such that we can bring together every single aspect of the back office, every single aspect of the wallet of the business into one platform. So the business owner can focus on growing their business as opposed to worrying about finances. And the core product that most customers use is our credit product, which is sort of our land, if you will, where we offer 60-day terms on every single transaction. So you get short-term float on every purchase you make with no interest. And if you pay us on time, you never pay us any fees whatsoever. And so a lot of business owners are using our short-term credit facility in order to grow their businesses even faster.
I think everything you mentioned there is exactly every issue that any entrepreneur or business owner has. You really just covered. Yeah, I'm sure everyone was just shaking their head. As soon as you went from one point to the other, they're like, yep, 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 yep. And then you go 60 days, you're like, oh, of course, right? And then I just think as an entrepreneur, outside of hosting this podcast, I run a content production agency, and all those problems are exactly it. And the credit card is one of those issues. Your credit card's here, you're making payments with vendors and stuff. And it's just like money's flowing all over the place, except in that one little account that you have that says profit, because you don't even know really where the profit is. Because and to your point, it would be so great just to log in and say, okay, profit here, expenses here, this is the float we have. And that float is so important. Why do you think there hasn't been another company that has solved, especially for that 60-day term, where it's like, we just need a couple dollars to hold us over until the vendor pays us, and usually 60 days is it? Why does traditional financial institutions make it so hard and expensive, right? Even if you were to get that, it's high interest credit cards or something else. Why hasn't there been an easy solution before Flex?
It's interesting you say that. And, as you were saying, a couple of things went in my mind. I think the best solutions oftentimes are the most obvious. So as I was saying, you were like nodding your head because these are kind of obvious problems that every single entrepreneur has. And frankly, it's surprising to me that no one else has really solved it as well. Because the way FinTech has evolved, kind of taking a step back, you had these big banks, your big kind of big four, big five banks, which everybody knows in the US. These banks had a number of solutions that were sort of bundled into one product. But the user experience of these solutions weren't as good as it should have been. The technology utilization wasn't as good. You had to sort of drive to the bank to, make a check deposit and, those types of things, right? And so a lot of startups sort of emerging in the last 10 to 20 years, unbundling every single aspect of the financial stack. Hey, I'm going to be a solution that does corporate cards to startups. Hey, I'm going to be a solution that does payroll for small businesses. Hey, I'm going to be a solution that does insurance for healthcare companies, right? And so it's almost like we have unbundled the financial stack to death. And we now need to rebundle every single thing into a kind of FinTech 3.0. And so that's effectively what we're doing. Some of this has happened in kind of emerging markets. Like if you go to Europe, you have companies like Revolut. You go to Latin America, you have companies like Nubank. You go to Asia, you have, a lot of stuff that, the big Alibabas and the WeChats of the world are building, and South Korea as well. And that's sort of happening in the kind of consumer space in these emerging markets. but nobody quite across the world has done this for businesses. And there's always been this kind of philosophical thing in the US where a super app will, not work. But we think that, business owners really care about user experience. And so if you can bring all of these different aspects and working capital and solve problems immediately for business owners, there's a premium for the user experience kind of upgrade that a user kind of finds himself in, where when all of these things are working in conjunction, your experience is, orders of magnitude, 10 times better than what you're used to.
I think you came up with a really great concept, right? We've unbundled everything to death. Even when you think about any type of business, how many apps, how many plugins do we have? Most people would be like, just give me what's when. I think that's kind of where HubSpot said, hey, bring in everything here. We'll handle everything you need. And that's why they've been so successful, because people are getting tired of having to log into five, six different things just to run maybe one marketing campaign.
Yeah, and
This is
frankly,
how,
like in banking, like, that we come across users all the time that are using one bank account for their personal needs, one bank account for this business, another bank account for another business. And then suddenly you're like remembering like four different logins and like, it's like, why can't all of this kind of interconnect and live in one place? That's kind of the fundamental question. The other thing you mentioned earlier that I wanted to also emphasize is, you said that, oh, my profit lives here, my expenses live here. Well, one kind of simple heuristic to understand how good of a finance stack a business owner has is simply asking them the following question: how much profit did you make last month? The reality is most business owners will not be able to answer that question.
me included, me included. And it's so true. And, I've read that book, Profit First, and they have a good, analogy of how to do that, but you're too busy doing the work, right? And
Yeah,
I think that's
exactly.
what you're saying is basically you're giving back small business owners the time to do their work so they don't have to spend so much time focused on this. And a lot of us have our own bookkeepers or annual accountants, but then even just to organize the information for those people is taking as much time as almost doing it ourselves, but just
Right,
without the
exactly.
expertise or knowledge. And to have a click of a
Exactly.
button and say, okay, we spent this much, we have this much floating. I think it's the hardest thing to wrap your head around, especially in those first, I'd have to say first, 1 to 5 years of operating a business. When you ask that question to founders that are looking for VC backing, how many of those have their numbers together? Or is it still kind of that blank look that I had when you asked the question?
It's surprising. Like, I'd say 2/3 of founders really don't have the information they need to, on hand, which is, oftentimes it can look negative in a deal. But the reality is that fundamentally is because their systems are broken. Right. And
Now,
so
yeah.
that to me is another opportunity of Flex, is providing the analytics to these companies so that they can actually provide the data they need, not only for, investors to sort of invest in the company, but in their day to day, they should know what their kind of runway is and, what they need to sort of get to the next sort of milestone and so on.
Do you think, with so many statistics about, the failure of small businesses and how hard it is, do you think this might be the core unlock for a lot of the small businesses? Because realistically, I think a lot of the small business owners know how to do the thing that they were selling, whether it was the product or service, but it was it was being able to organize their finances. It was being able to leverage things like credit. Do you think this might be the core unlock to kind of help increase the number of small businesses survive, especially in the United States?
Yeah, no, absolutely. And we fundamentally believe in that, right? So one kind of internal saying that we say is we really want to revive the American dream. And if you think about it, entrepreneurs used to be able to dream business ideas and then go and execute on it with, no barriers and so on. And the reality is that now you just have just so much work that you need to do in order to run your company in an efficient way in a very competitive market. The tools just frankly don't exist, right? And so it's no surprise that less than 0.01% of entrepreneurs are able to get the funding they need to actually go and grow their business. And so really there's an opportunity to be this kind of deep embedded financial partner to entrepreneurs in not only venture backed kind of startups, but also Main Street businesses, to help them grow and sort of provide them the tools and services and the capital so that they can achieve their dreams.
already have 25,000 small business users, which is seems like maybe not enough to you, but I think from any entrepreneur, having 25,000 anything users, email addresses is a huge accomplishment. Can you talk to me about maybe was this more founder led customers? Talk me through like acquiring those first maybe 100 to 1,000 customers. They come all at one time. I think a lot of people want a better understanding of how to acquire customers in any technology or traditional entrepreneurship venture that they have.
Yeah, frankly, the demand we have for our products is so intense that in Q4, we had to actually switch off our paid advertising because we just frankly didn't have the capacity and the resources to serve every single customer signing up for our products. And the reality is that in some ways, we have benefited from a high interest rate environment whereby offering 0% for 60 days is a offering that's almost too good to be true. Right. And so as a result, our growth numbers have done really well. And of course, we're making revenue no matter what through interchange and merchant fees from the merchant side. But, it's enabled us to really hack our growth. And as a result, we're seeing, tremendous month on month growth, even after switching off our advertising. But the reality is, kind of zooming out and answering the question and how to think about growth, you have to solve a problem that has inherent market pull. A lot of entrepreneurs work on problems that nobody needs, like a solution in search of a problem, right? And so, we've gone through a few iterations ourselves. When we started, we knew cash flow was a problem, but at first we thought that payments was the answer to that problem. And as we kind of drilled further down in the idea maze and started talking to more and more customers and serving them, we realized that the real opportunity was using working capital as a shtick to sort of help customers and then providing them the platform to manage their business a lot better. And so I think fundamentally a customer doesn't care about your solution if it doesn't solve a core problem of theirs. And so as an entrepreneur, one must really focus on finding that market pull rather than thinking about how to market, if that makes sense.
You speak about focus and that market pull. How do you decide which lever that you're going to pull? I'm assuming businesses coming to you, the 5, 6, maybe 7 features that you have is not the only things that you're being asked for. You kind of do some market research, speak directly with your customers. How you decide, okay, they need this. We're going to focus on getting them this before we get them that, which maybe not as many people need, even though it might be a higher profit margin for maybe your organization. How do you balance all that demand that you're receiving?
Yes, in our business, we have kind of a unique 2-team structure where we're dealing with a lot of risk, right? We're providing you credit. We have to underwrite these businesses. We're dealing with fraud. We're dealing with all sorts of KYC, KYB issues, and so on and so forth. And so we basically have split our team into 2 teams. So one team focuses on making money, and the other team focuses on preventing losses. And they're comped accordingly. And so that has sort of enabled us to sort of set up the internal incentive structures in such a way that we're able to prioritize problems accordingly, right? You have to put the customer first, right? If the customer wants a very specific feature that's not a super profitable idea, but it will drive customer happiness, that's what you should focus on. And so, if you went and checked our sort of internal ticketing system where we track, product feature requests, there are probably hundreds, if not thousands of things on there. But we're constantly asking ourselves the question, like, what will fundamentally drive customer happiness? And then if you follow customer happiness, profit sort of is a kind of byproduct of that.
That's super interesting. And you talked about fraud, you talked about KYC. Those are like saline words to me. That's a compliance background to my son. What are you dealing with from like a fraud perspective? I can assume that there might be fake IDs, modified IDs, synthetic IDs. What's some of the biggest things that you're dealing with from like a compliance side of the program?
Yeah, I mean, that kind of whole world is absolutely insane. I mean, I didn't frankly realize you could literally invent social security numbers if you wanted to. This is like a kind of a fun fact that I learned through this journey where SSN is like totally a made up way of doing identity management. And that data is sitting with credit bureaus and you could frankly, if you were motivated enough, trick the credit bureaus to think that the SSN exists. So if you can literally invent a social security number think about all the other things that you could invent and kind of stake and trick the system, frankly, from an underwriting perspective. And so we have done a lot of work in adopting what are the best practices across our industry, right? So, if you go and look at credit card companies, they're all using certain vendors that, are kind of the low-hanging fruits. So we went and integrated with all of those. Then we asked ourselves, all right, what are rules that we can set on our side where we can knock out bad applicants and bad actors really, really quickly? And so that was kind of a whole other layer of systems that we had to build internally. And then over time, we now have enough data through a very significant number of applications coming on a daily basis and a very significant number of transactions happening on a daily basis that we're able to sort of build patterns. And then we're able to then surface those patterns to humans who are then able to further investigate certain problems. And so it's not a perfect kind of science. It's a little bit more of an art that, you need to constantly iterate and, be on the lookout. And so when I say we have a team that literally just focuses on preventing losses, they don't get excited about, we close XYZ revenue deal, et cetera, et cetera. All they're thinking about is how do you prevent, stupid mistakes?
How do you keep the millions of dollars you just raised, maybe, or fund? How do you keep it within the business?
Right.
That's super interesting. And, banks, crypto exchanges, they haven't really figured it out either. There's not 100% model that you can go by. Are there other risks?
I think the one kind of piece of advice I can give startups that want to get into the space is that a lot of times as a founder, you think, oh, there's a better way to do things, because that's what your brain is kind of trained to think. Over time, I've realized that there's certain kind of kind of core areas that it's not worth reinventing the wheel, right? Why is it that certain institutions have the least amount of losses? Well, maybe it's worth like going and looking at what their KYC and kind of credit rules are, right? And so, we saw a lot of kind of fintech companies, lending companies, their kind of valuations drop, 50, 60, 70% in the last 24 months, because a lot of them are doing a lot of very novel things when it came to risk. And so our philosophy is, let's not do anything novel with risk. Let's start with what is the status quo, and then ask ourselves, all right, where can we improve certain levers? Where can we sort of optimize certain experiences so the user has the best possible time?
Are you utilizing some of maybe the skills you have and other team members have in AI and LLM? Are you using some of this machine learning and some of the, whether it's identifying suspicious activity or getting an analysis of all the applicants that are coming in, that maybe see from a marketing perspective, who's your core audience or who's really needing your services? Have you been leveraging AI?
Yeah, no. So, on the AI front, this is a conversation that I have with our CTO all the time. We realize that the best applications for a lot of AI tools are really kind of inwards looking rather than outwards looking in finance. Because the reality is that the problem with LLMs is that, there's a certain kind of fuzzy matching that's happening with the outputs where, in finance, when you ask the system 1 + 1, it better be 2 and not 2.2, right? So that's sort of the problem that we have with LLMs. So we have found that it's better to sort of apply these kind of techniques inwards. And so we're definitely utilizing it in every single aspect of the stack, be it, at the point of origination to, ongoing kind of analysis and underwriting and, transaction monitoring and customer support, customer service, providing better onboarding tools to customers, et cetera, et cetera.
Now, I want to ask you something that I don't think I hear much about on other podcasts or even in general. You talked about family running more traditional businesses, not really looking at VC backing. What's your relationship with them? I'm assuming you're looking at that business. You're like, okay, we need to run paid ads here. We need to, you have all the insight. How do you balance, having the knowledge that you do and respecting that the family probably just wants to run a business a certain way? Tell me about that dichotomy. Has there been any issues? I don't think entrepreneurs talk about this very much, especially when they're raising millions and sometimes billion-dollar valuation.
I think what my family's kind of business experience taught me is that, zooming out, you really have multiple parts of your brain, right? There's a kind of a right side and left side. And one thing that I've realized is that to be a traditional entrepreneur that has no possibility of receiving equity funding from venture capitalists and so on and so forth, you really train yourself to think in a very specific way, which is how much money did I bring to the table today? Right. And so that there's a certain like level of clarity of thought that that type of thinking brings. And so the way that translates now to a venture backed business is being ultra focused on the right metrics. Because a lot of times what happens with venture backed founders is I think a lot about vanity metrics. And so we've been very sort of deliberate and thoughtful about, not going the route of some of these vanity metrics. One vanity metric that is a pet peeve of mine is headcount. A lot of people will talk about, oh my God, we hired 200 people this year. But what does that really mean? Did that contribute to, X in revenue and Y in cash flow and Z in kind of customer happiness? And so we've been very thoughtful about headcount. As an example, we're doing for our scale of revenue, we have competitors who have literally hundreds of employees and we have 43 people today. And so we've been very, very kind of deliberate. And that sort of comes from this training that what are the right metrics to focus on, which, goes back to my father saying, how much cash should we bring to the table today?
I love that. And I think that's hard for an entrepreneur to do, right? You have the demand, you're turning off paid ads. You could probably, hey, like just times what we have by 2 and accept twice as many customers. You realize like that there is going to be a diminishing return there. And you have to put the nice fundamentals, the processes, the procedures, and the protocols in place before you can do that. Where some companies, they just say, hey, like let's times it by 2 and let it run. Would that be a fair assessment?
Yep.
Awesome.
Yeah, no, I think like clarity of thought and kind of clarity of focus and knowing what to focus on. Yeah. Really, really important skills.
What are some of your predictions? We're recording this in early January. It probably won't be released till February or March. What are some of your early predictions in 2024 that you see in the fintech space, or some of the trends that you're keeping your eye on, whether it's regarding a Flex or maybe something else?
Well, I'll talk about Flex. Can't really predict, what's going on at other companies too much, but at Flex, I can predict a whole new kind of suite of products that will launch this year to go after even more of the finance stack to help companies run their businesses better.
I want to push you, but I'm assuming you would can you give us the category that might be in? Is it more on the credit side, the banking side, maybe even more on the loss prevention side?
All of the above.
I knew I wasn't going to get much more out of you. What are your thoughts on crypto? I see that, 305 Ventures invested in some NFT companies, Nifties, Better, I don't think is using blockchain, but I'm assuming that would be a great use case for blockchain. You have some other Web3 based companies. What are your thoughts on crypto NFTs, especially in the US now? We just saw the Bitcoin spot ETFs get approved by the SEC. And it seems like, okay, the floodgates are open. Let's go 100%. What are your thoughts on crypto?
I think one kind of very interesting element of crypto that, if I could bring it back to what we're doing at Flex is faster money movement. And I think that's an area that nobody has quite figured out at scale. Right. And so I had this experience recently, I was in Dubai over New Year's and, in the US, you have this notion of Venmo and Cash App and Zelle where, you're splitting the bill and you quickly Venmo each other $100 and you kind of move on. Well, it turns out if you're in Dubai, you don't really have, a corresponding user experience for that. And so, however, my friend suggested that, hey, like, let's split the bill. Could you just send me some USDC? And, he pulls out a QR code off his wallet and I'm like, oh my God. So I open up my Coinbase and, instantly sort of transfer some funds to them. And so I realized at that moment that money movement is going to be the next big thing in crypto where, if we can figure out a way to go beyond crypto exchanges, build like a true consumer level peer-to-peer application and also bring that peer-to-peer kind of money movement application to business transactions, to B2B transactions. I think there's a lot of interesting things you can do, especially as you think about FX, where sending, large multi-million-dollar wires today from, let's say, a Bank of America to, Bank of England, like an HSBC, is actually a very expensive endeavor. And so there's a lot of optimization you can probably do around that.
Expensive, hard. It's complex too. Even just to send a wire, $500, something goes wrong. You have to call the bank. The bank's not accepting on the other. I think anyone that's sent a wire transfer has said that, crypto might be just the better way. And I love Dubai personally. But you've actually been quoted as saying this, that your best negotiation advice is to start a negotiation by saying, I am here to make a deal. I'm not saying that's controversial, but it sounds like, and I've heard other people say, the person that wins a negotiation is the person that can sit there and be the most uncomfortable. But yours seems like a different approach is like, hey, showing that I'm here to deal. I'm not here to just, go back and forth. Walk me through that and how's that served maybe you from a VC standpoint and maybe you as someone that's like, hey, I want to invest in some of my friends and now they have a huge cap table. They don't need my investment. Maybe that kind of knowledge and impart that to some of our entrepreneurs and startups.
Yeah, no, absolutely. That was so, a really good friend of mine was very kind by posting that. A lot of people tend to have a very like adversarial style to negotiation and kind of making deals. And it's very kind of high pressure, kind of sales tactics, being aggressive and so on. And I found that, the best negotiators don't think in those terms. They think in terms of like, what is a true win-win outcome in this conversation? And so I think, if the desire is mutual to do a deal, then just stating the obvious that, hey, we would like to make a deal. Now let's make it work. Oftentimes totally changes the dynamics of the conversation and the kind of tone and body language and psychology and psychological safety and so on that, enables you to get to the outcome that you wanted in the first place much sooner.
I love as soon as you said body language, that was going to be my question. Do you notice the body language change? Because me just hearing those words has me feel much more relaxed in any
Yeah.
conversation.
No,
Have you seen?
you can apply that to like literally anything, right? You could
Right.
say that, look, let's say you're negotiating some sort of enterprise software contract, right? And you tell the enterprise software company that, look, we'd like to use you guys. Now let's make the pricing work because the economics matter to us. And then it's like, okay, what's the best we can do to make this happen? They're motivated, right? But then you hear these kind of tactics sometimes like, oh my God, we're evaluating 5 other companies in this space. Why should we use you? And that sort of can work, but it's like a aggressive tactic that I don't think has the best possible outcome. And frankly, is also like, creates unnecessary anxiety and stress on both sides.
Do you see any tactics like sharp tactics like that in the VC world? For maybe not now. The market's kind of soft to be trying these tactics where people would come to 305 ventures, which might be a little smaller than maybe your A16Zs or Sequoias, where they're just trying to get a term sheet from you in order to leverage with other VCs, and they're really not interested in having you as it's a partnership. If you're investing with them, I'm assuming it's a partnership. Have you noticed tactics like that, or is it so hard to get VC funding that those tactics have kind of been removed from the system?
Well, fortunately, as an investor, like I act more of an angel or like an operator investor where we're writing such small checks that we're not competitive with anybody. If anything, we're trying to sort of help entrepreneurs get to other lead investors and so on. And so I don't really kind of face that experience often. One experience I do see, founders make all the time is they send out these very arbitrary kind of deadlines that, hey, we're going to make a decision by, Monday, January 22nd, 9 p.m. Eastern, right? And the reality is that that type of thing, if it's actually like not backed by substance, rarely works. And it's again, one of those things where like it creates unnecessary anxieties that most people will just like move on. Right. And so, that's another kind of pet peeve of mine that, and guilty of that mistake. I've made that mistake in the past in my early days. So it's like not like, something that like I haven't done myself, but over time you realize that people really just want to figure out if it's a good relationship and, someone who you'd actually want to work with and an idea that actually makes sense, that has market pull and kind of all these fundamental dynamics that makes an investment worthy.
Where can people find your socials? 'Cause I think people are really going to enjoy this episode. I think you touched on everything. The Volley AI story has me giggling still. Where's the best place to find you? On Twitter, or LinkedIn, maybe?
Yeah, no, I'm on all the platforms. My social handle is Zaid RMN on Twitter and Instagram, and just my name, Zaid Rahman, on LinkedIn.
If I had to ask you one thing that you would tell maybe those seeking investment entrepreneurs now, the market's not that great. What is one piece of advice that you would instill in them? Because you've probably seen some pretty tough markets, especially maybe as a person of color. Like getting investment is not always the easiest. What's some advice you can give to somebody?
Yeah, I think that's a great question. And, honestly, like I was talking to a friend of mine a couple of weeks ago. Historically, even at Flex, we've seen a lot of success in 2023. Historically, it wasn't like that. It was like banging your head on the wall and constantly struggling and getting rejections. And it was hard to even raise kind of some of the initial capital because we have competitors who are going after enterprise opportunities who are really well capitalized. And so people were asking the question like, oh, X and Y exist, why do you need to exist? Right. And so the one kind of lesson that I can have taken away from all of this is that persistence really pays. Being persistent and not giving up and, iterating upon your business and your pitch and whatever kind of endeavor you're going through is worthy. But at the same time, not giving up is a real premium. Like when things are really, really dire, just sort of getting up the next day and getting back at it and showing up is what really counts.
And I think that's great context, especially when you're like, yeah, we have to turn off paid ads because we got so much business coming in. I think that's really great context because you were persistent and now the market is almost coming to you.
Yeah. Yeah. Yeah.
This has been a wonderful conversation. I know everyone's going to enjoy it. We'll put all your social handles there so they can, see some of more of these great quotes that you have that I think might spark some really great discussions and thought provoking conversation. We appreciate you being on the Around the Coin podcast.
Thank you, Stephen. Really appreciate it.